So it doesn't look like my video is working, Dwight.
Yeah, it is. I'm seeing you and I'm seeing your screen.
Okay, because when I look at it, just has a blank, dark space, where my name is. So it's all right. I don't need to see it. Um, all right. So welcome to the webinar. Let's see, just we have almost 100 people here. So I'll wait about another 30 seconds and then we can get started. Just remind me, I'm going to give out my book at the end of this presentation if I forget. All right, so we're almost up to 100. All right, I will go ahead and get started. So welcome to the second day of the 3-day live event, How to Capitalize on Monster Moves in the Markets. My name is Mark Shawson, the pattern trader. Yesterday, I was sharing with you how I size up trades purely based on price action alone. Now, sometimes there's events in the market. Today, we had a huge CPI number. I was talking about it yesterday. CPI is Consumer Price Index. Obviously, the whole world is fixated on the growth of inflation over the last 12, 18 months. All the central bankers are looking at, how big is inflation, how much, is longer is going to be, and sizing up their monetary policy, what interest rates are going to be around this number. So it was a huge number. But I don't look at the number. I look at how the market responds to the number. So we'll talk about that in just a moment. So to me, I just look at price trends, price patterns, price action to set up my trades. So this is what I did today and yesterday. So yesterday I came in short Zoom. I think I spoke about it. I said, shorting Zoom. I shorted at 110.50 yesterday, and today it dropped to about $101. I put a limit in the market right as the market opened because I could see that the market was going to open much lower. CPI came in very, very hot. So CPI was anticipated 8.8. It came in over 9%. So we had a 9 handle on the CPI report. I knew it would be very emotional. I could see all of so, just like you're seeing right now, the market is actively trading right now. Even though the stock market in the US closed half hour ago, you can see that it's very actively trading. In fact, Tesla has dropped $3 just in the space of the last half hour. And these markets are very actively trading, but they're also very actively trading before the market. So I have, we started trying something out where we introduced on a limited basis, something called the boiler room, where I open it up to a small group and we look at the markets before they're actually moving. So, Mike Tyson used to, have a saying. He used to say, everybody has a plan until they get punched in the face. Meaning that, I look at my trades, I look at the markets, and then, you see what the markets are doing, and then I somewhat adjust accordingly. I mean, I don't, try and, manipulate around there, but to my mind, if I'm looking to buy something and the market is going to open a whole, so sometimes the Dow Jones will be like just opening 500 lower, and I'll be looking at all the stocks I want to buy. And to me, I can get, a bargain into a lower opening if I think that stock's going to go higher. The flip side is if I'm looking to go short, in a market that opens higher, I can get a bargain into a higher opening. And that's exactly what I did with Zoom yesterday. So Zoom, yesterday, we opened higher. We opened a little bit higher. We went higher, and I sold right into this rally on Zoom for, certain very good reasons. But the point is I shorted at 110 right here, and then it dropped this morning, and I got out right here at 102.80 because I just figured there was a little bit of support in here. So I look at support and resist. I look at different areas where prices are. But the point is that I saw that the market was going to open up much, much lower. So you can see that this little left hash mark right there. Let me just kind of blow this up a little bit. So this is the Qs on my trading platform. And you can see that the stock market, these are the triple Qs. This is an ETF that tracks the NASDAQ. And so it's a proxy. So if I want to buy the NASDAQ, I'll buy the triple Qs. If I want to sell it, I will sell it or buy puts and calls on the Qs. But the point I'm trying to make is that what I was looking at was that we had this resistance level in a big down market. But there's also a lot of junk right underneath all this stuff. So this is a very difficult, this has been a very difficult market because really you're just banging between these numbers. And so I'm just trying to exploit very small moves into this thing. So I knew that we had this double top resistance. We closed right on the low. And so I started loading up on put options in the triple Qs, which is a bet on the decline. And I also bought some call options on this inverse. So I'll talk about that in a moment. But you can see that it opened right at the low. So this is where, I could see in the pre-market session that the stocks were already poised to open lower. Now, you cannot open and close option positions until the market opens. So as the market opened, I got out of my put options, or actually I didn't take a copy of that. I took a copy of my, so the flip side of that is, just to put this, so this is kind of another thing called the SPXU. And again, it doesn't really matter what this is. I'm just trying to show you kind of the relationship on how I correlate price action. So this is an inverse ETF. Now this is gonna be a little bit complicated. So an inverse ETF, this actually goes up when the S&P goes down. So if the S&P goes lower, this is an inverse ETF, so it will go higher. When the S&P goes lower, this will go higher. And the thing is, this is actually a 3 times levered. So if the S&P goes down 1%, this will go up 3%, right? So it doesn't, so I don't care what the instrument is. I don't care if this was corn or wheat or whatever. I just looked at it's trading within this band, and that every time we kind of get here, we kind of, start bouncing. So I started seeing this little double bottom area, and I started buying these things at 46 cents. And then I could see that they were opening higher today, and it was right into this resistance. So I actually, just got out and I took, triple my money. So you can see here, I bought these calls, some for 45 cents, some for 49 cents, and I blew them out at $1.16. So whatever, almost 3 times my money. And in the triple Qs, I did the same thing. And then, on Zoom, I was short the, Zoom stock, and then I got out. So I got out of everything right on the opening because I could see this very big wide gap, and I just got out. So I did a whole bunch of other things today, but I had all of these short positions, and the market opened huge lower, and then it recovered just because we're in a very complicated trading space right now. So it's very hard for me to kind of explain everything I do and how I do it. And that's why I'm going to give a little plug. I have something called the Boiler Room, where this is an early morning program where we start looking at all of these moves ahead of time. And we just started this program, and I'm just thinking about doing it on a wider scale. So if and when we do that, I'll let you guys know. But this is kind of the craziness that is going on in the market right now. So this is what happened. When the CPI came, you opened right at the lows. You had this huge sell-off. But, because there was so much support in this area, I just said, I'm going to take my money and run. And then you had this huge rally all day today. Now, this also points to kind of the perversion, if you will, of the markets. So today, two things very negative came out. Or, if you read it in the paper, you would think it was very negative. So today, on the opening, it was announced that CPI is running at 9+%. And this is a very negative thing for the Federal Reserve because they're way behind. So it means they have to raise interest rates. So that should be very negative. Then it came out later in the day that now the Fed, instead of, going 0.75 basis points in their next raise, there's all kinds of rumors now that they may go 1 full point. And despite that, the market rallied. So this is why I say, if we could, all go downstairs and read the Wall Street Journal, we'd all be rich. But the market doesn't move that way. The market is a discounting mechanism, meaning that the market has already fallen tremendously. It's already anticipated that inflation is very bad. But what the market also does, it's a forward-looking mechanism. So what it might be saying is that, hey, it's very hot today, but this was about yesterday. The market is a forward-looking mechanism. So they're saying, well, maybe this is an area where inflation is starting to peak, that this is going to be the maximum we see. And so so there's all kinds of things going in the market. And this is why I'm saying you really can't just, look at all this fundamental information and try and figure it out. So I'm not quite sure where to kind of start today because I basically got out of all of my positions. And right now I'm kind of on the sidelines waiting to see what the next move is. We've got support and resistance. We've got, little areas where these things are backing and filling. And there are, certain trades where I will really back up the money truck and certain trades where, I'll back off. So today I also closed out my gold and silver positions. I had a massive profit here. And, it got to an area where actually on our elite things, I said, get out at 1907. I think it hit that area exactly. So why did I get out? Because to me, people always say, well, where do you put your take profit? How do you put your stop loss? And it's a very difficult question to answer only because the market is so fluid and I look to the market to kind of give me information. And so my mentor, when I was a very young kid, I was trading under this guy, Graham Loving. And he was that big commodities trader I told you about. And he used to say, he says, Mark, the market puts me in and the market takes me out. And so this is what I've been looking at in gold and silver. So I see these huge, big bear patterns. This is what we call a double top. Looks just like the letter M. And so this is a reversal pattern. So when we see these patterns, it means that the market leading up to this pattern was going up. And then by definition, a reversal is a market that's going the other way. And that's exactly what this thing did. So I started telling our members to start shorting it here and all over the place based on the mounting evidence of these technical price formations. Now, after the double top, we had a rounding top. And again, this was, the emails that I sent to our members, analyzing gold, right? So this was a few weeks ago. I sent out this email. You could see the rounding top here. You could see the double top here. So I was looking at all of this at this time when gold was 1,800. And today we hit almost 1,700. So I took about $100 out of the gold market just looking at these price patterns. And this is what I sent out to our members on Thursday, June 30th, put a sell stop in gold at 1801 and put a take profit at 1707. And that's exactly what happened. It just clicked 1707. So they made whatever, $94 out of that trade. And I made, a bucket full of dough on that same trade. So it was kind of arbitrary. I mean, it was really lucky. I said, put the take profit here. And, frankly, that was just a fairly lucky call because what I do is, I said to our members, get short right there. You can see that little inside bar. I said, get short there. And then I put my take profit, quite a ways away to give it room. And, then I see what it does. So this actually banged the take profit and then reversed on a dime. So that was, a little bit lucky. But now you can see the market made a new low and then closed on the high. So this is what I call a bit of a key reversal. When you see these things, makes a new low, close on the high, you have a bit of an up move and what have you. Now, I don't say just trade reversals in a vacuum. Right. So I wouldn't be looking to, go long on this, although, you probably will get likely a push into, higher highs out of here. So, yeah, you could probably get a push back to 1770. So the market action, told me that there was a whole bunch of support in here. And now together with this price reversal, I'm out. And I'll, if you're aggressive, you could probably take a little poke on the upside, only because, I kind of understand how price works. And again, it's hard to filter all of it into a generalized discussion. There's a lot of moving concepts, but basically what I do is I look at patterns and price action. So this gold has been trading within the cadence of this long-term ascending, broadening price pattern. So ascending broadening is a pattern that prices are going higher throughout the pattern. They start out narrow and they widen or broaden out at the top. I think I showed you that the S&P was in something like this. And the neat thing is, once we see these things, we can kind of go and see how these things behave. So all the way here, you had what I call an expansion of volatility. So you can see this, first off, this is a weekly chart, which means that each one of these price bars represents 1 week in time. And you can see how small and orderly these price bars were. And then all of a sudden, you started to get massive increases in volatility, meaning that the price ranges of each one of those weekly bars was 3 or 4 times the magnitude of what the preceding bars were. And typically it's my rule. If I see 3 magnitudes of volatility, I, step out, and say, okay. And I said to our members, this is where I'm getting out. And, I was happy to let that thing go up beside me. So it was a lucky call. And that was exactly the top of the market in July of 2020. And so, for a year and a half, through the most rampant inflation we've ever had, through Third World War, through quantitative easing, we're actually $400 lower than we were 4 years ago or a year and a half ago. So this is, again, why you can't trade markets off the news or off logic or off some kind of correlation. Where you've heard in the past that gold goes up because of inflation. You've heard that gold goes up during world wars. You've heard that gold goes up in recessions. Well, it's done nothing but go down during all of those. So this is why I only watch price. Price is the news. Price is a discounting mechanism. Price is ahead of whatever the events. Price is pricing in. So whatever this guy saw here, it will happen 4 months from now. And you'll read it in the paper and go, well, this and this happened, but this market was already pricing in that event. And that's how markets work. So you can see that now we've broken out of the low side of this ascending broadening, which sets in motion, very likely, something that is going to go lower. But, what I do is I put my boundaries around prices and then I simply surrender to what the market is going to do. So I think it might go lower, but if it starts kind of breaking here and starts showing me something else, my saying is the market is always right. So I put my parameters around price and then I, see where it goes. Now, I also know how price works. When price usually breaks out of a major area, it usually retreats to the breakout. Now, I said this in my newsletter just a week ago. I said we're likely to break lower and then retest the neckline. So I've been doing this so long I can draw these charts in my sleep. So you can see that we've got a bit of reversal here. I would not be surprised to see this retest this thing and then go like that again. So you can see that we've got a bit of a reversal working on the weekly here. We make a new low. We'll see where we close. This is a weekly bar. Where we close is, very important to me. And you can see that we're in this kind of support zone right here. So this is why I said take profits right around here. So these areas are not, they're not just out of the blue. There's a reason why markets, hold at certain levels or, go to certain levels. So we're at this inflection point, and now, I think that we're likely to go up a little bit higher, and then I'll get ready to reshort it again. So this is how markets work. And just to kind of, overlay, so I'm going to actually do something and show you this. And this is the beauty of patterns. Patterns repeat, and they kind of give us an insight to what's going to happen. So it's like kind of having next week's newspaper, right? So I don't know if I can do this adequately, though. All right, so I've overlaid two price charts and this is the, oh no, this is the beauty of understanding price. And this is all that counts. So I've showed you how I've just made hundreds of thousands of dollars just by looking at this. So this is the ascending broadening that I'm looking at in gold. Now, last February, and maybe there are some people on here that, are part of the boiler room or part of, my elite things. And so, I'm just not, I can actually find you and, pull up the emails where I was saying that this is in an ascending broadening price. And I said right here, when it was at 380, I said, we're going to 260. Right there in February, when it was at 380, I said, we're going to 260. Now, how did I know that? Because that's exactly where the bottom of this thing is. It actually went to 255. So Dick says, yes, he did. I heard it live. Thanks for that, Dick. And so again, it's not, that I have any special IQ or genius. I understand how markets work. And now this is what I'm talking about. You can see that when price broke out, just like gold, it went much lower and then did a retest. And so, I wouldn't be surprised to see one of these. So you can probably overlay this. And this is like going to be a preview of coming attractions. But if it isn't, I just look at how, markets should go. And if they do something else, then I also anticipate and do that other thing. So, sometimes, if a market doesn't go down, it's going to go up and I'll just buy it because it didn't do one thing that it should do. And that's a whole other thing. So now that we're talking about this, this is the IGV ETF. So this is an ETF that tracks all of the technology stocks like software and Intuit and Microsoft and a whole bunch of, and so, technology was obviously the leader on the way up in the market, and it's been, a leader on the way down. So it's a very important segment of the S&P and the NASDAQ. So while we're looking at it, you can see that in addition to this very negative ascending broadening price pattern, we also have this head and shoulders. So it was the combination of seeing these two patterns that I told my members back in February. I said, people are going to lose trillions of dollars of their money. This is going to be one of the biggest bear markets. And so again, I was looking at what everyone else was looking at, but the patterns were telling me something very extraordinary was about to happen. And so it's all about price. Price is the news. You know, back in, November, wherever the market made a new high, everything was rosy, blue skies ahead. And so price is ahead of the news. Now we're hearing about layoffs. Now we're hearing about, earning softness. Now we're hearing about all of this, but the market was predicting it right there. And so the market is ahead of events. By the time it all becomes evident and apparent, the market's down 40% already. So you can see that, now we're just in this huge little consolidation zone, but, we're not nearly done. To me, there's, this is just preparing for the next leg. So this is a weekly chart, and you can see how difficult it's been in the last, so even though I've known this market's going down and it's likely to go lower for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, we've just been banging in this range. So, this is what markets do. We've been spoiled because markets have been very directional, going up in the last year and a half, going down. So, I take advantage of either way, but sometimes, markets get into these tight ranges and you can chew up a lot of emotions and money just banging back and forth, figuring this out. But if you, step back and look at the big picture, I just sell into all of these rallies because this tells me that we're going much lower. We've done a tremendous amount of damage, but I think we're going to go much lower. So it's just very difficult right now. I mean, I've been looking for trades, to go into tomorrow, and there are certain times to load them up and certain times to stand back, and sometimes you just need the market to give you more information. Oh, this is gold. So I'm trying to think what else I'm looking at. This is the pound versus New Zealand dollar. And looks like it's rolling over. Looks like it's hit a pocket and wants to go lower. But this one's a very difficult one to trade. So, I mean, I wish, here's one that I'm looking at. This is FedEx. I should have started with the weekly. I've messed up all of my, so this is Federal Express, ticker symbol FedEx, and this is the weekly chart. So, whenever it's in a kind of a narrow trading range and you can't really see what's going on, I mean, most people are looking at 15-minute charts. Even on the daily chart, sometimes I can't sort things out. So what I like to do is step back, either go the monthly or the weekly, take a look at a big global view, and then dial it back into an area where I can make a risk reward trade. So what I see with FedEx, and this is what I see with all of these charts, they look just terrible, which just tells me the market is still going to go much lower. What I see on the weekly chart with FedEx is this double top. Now at the end of this thing, I'm going to give you my book, which has all of the patterns and the strategy and what have you. But a double top simply is you go to one top, you come back, and now you go to another. Now, people say, well, is this a top because one is lower than the other? It doesn't really matter. I think we can all agree that this has what looks like an M configuration. It has two peaks in or near the same area. It retested, it failed. And by definition, that is a top. And so if a market has made a top, it is going to do what? It has to, there's nowhere else. We shouldn't say there's nowhere else to go, but by and large, over time, that market is going to go lower. Now, in addition to this double top, we have like a complex, funky looking head and shoulders, where it looks like a man or woman's left shoulder, the peak is the head, here's the right shoulder, and you have this kind of down sloping neckline. Now, the implications of a downsloping neckline is that it's even more bearish than, because typically you'll see like a head and shoulders look like this. This is a symmetrical where you see the neckline because the shoulders are in the same, but because this shoulder, the right one, is lower than the left, you kind of have this downsloping. So they are both very bearish in their implications, but the downsloping neckline actually implies a bigger and more devastating move. And so you can see we had this dead cat fake out bounce here recently. And sorry, I'm trying to get rid of some of this. So you can see that we got into this little collection area here recently, so this is where markets, support. You got to, watch where they support. And sometimes you get one of these, but if you understand the implications of this was just a fake out, and we're more than likely going to go back in the direction of the trend. And so now, once I understand the weekly, I dial back to the daily, and on the daily, I can see this head and shoulders top on the daily. We basically broke through the neckline today. So if we look at FedEx, you can see that it's a mess. So to the unfiltered eye, you look at this thing and it looks like a coin flip. You can say, well, Mark, this is really just, really it's a coin flip. This is going up and down and nowhere. Sometimes it's been up, sometimes been down, and it's like right in the middle. But this thing is actually coming down. It's in a downtrend. And the major, what I call the governing patterns, the patterns that are governing or dictating price action now and in the future are these. So you kind of have this double top head and shoulders here. And now more recently, you have a double, you have this head and shoulders. Again, looks just like a man or woman's left shoulder. The peak is the head, and this is the right shoulder. And now today, you confirmed it by closing below the neckline. So now, you've had a pretty good move. What I would do is, if we got any kind of, movement back here, I would just short into that. I would short into a rally on the premise that this is really the guiding pattern, that this will run out of steam at some point. So, I would just start legging into this thing. Somewhere, just take a very small position, take a nibble here. And actually, if it goes higher, I would add to the position, which is really not a good thing to do. It's called an anti-martingale, where you don't want to add to losers. But frankly, like I said, I short into strength and buy into weakness. And so this thing is going to start going down, and you can just look for some kind of entry, somewhere around here. So, on any retreat back, close to, wherever, 218, 220, somewhere above this neckline, I think it will continue going lower. So I would look at FedEx, and just about everything else is in these bear price patterns. But again, it doesn't matter what the instrument is. I'm trying to share with you a way, a prism, a paradigm, of looking at the market through the lens of price. Everybody looks at, what we call fundamental information, and try and figure out these macroeconomic global phenomenons. The markets go in very counterintuitive ways. They collect, they go all over the place. This is a down market. They do a bit of a double bottom. They go back up here, and I will take a piece out of all of these moves because I'm just looking at price. I'm not looking at earnings reports or anything of that nature. So this is all you need is price and time. And what you'll notice is that this is a clean or a naked chart. We call it a naked chart because there are no indicators. There's no volume here. There's no Bollinger Bands. There's no MACD. There's no moving averages. There's nothing on this chart. I'm just simply looking at a picture, and I'm trying to search for certain guiding patterns on both the upside and the downsides. We got into a little bottom here, and you could have taken this for a cruise. So this is all I look at is price. Now this one is a little bit more difficult because it's really, I don't love trading markets that are, sideways, but this has huge moves within the sideways configuration. And all I'm looking to do is identify a pattern and take out sizable moves wherever they may occur. And so this is what, I'm looking for. So now, if I got short at 218, I would be looking for another retest of these lows. I'm trying to just think of, charts I'm looking at, some of the more formidable looking bad charts, Caterpillar, Deere. So these are horrible, horrible for people who are long. So this also exposes the myth of buy and hold investing. So we've been told by Warren Buffett and, all our financial advisors that, over the long term, everyone you hear, all these analysts said, over the long run, this will work out. Well, here you are in 2020, you're below where you were in 2021. So this was where? This was December 2020. So now all you have to show for a year and a half of work is that you're losing, money. And so, yes, on average, since 1908, the S&P is up 8%. But what they don't tell you is that there are whole periods of time where the market has little or no gains. So when we topped out in 1929, so who knows this? When we topped out in 1929, how long did it take us to make another high? So this was 1929. What was this year? Anybody know? Michael says 8 years. Anybody just hazard a guess? Dick says 45 years. Daniel says 1932. You're all wrong. Dick says 1946. You're wrong. 1939. You're wrong. 1950 says close, Raj. I think it was either 52 or 54. I have to go back and look. It was 54 because it took 25 years to get to a new high. So, buy and hold can be, an eternity. Then there was another bear market in 1965. 1965 didn't make a new high until actually it says 1984, but on an inflation adjusted, it wasn't until 1991 that you made a new high. And then between 2000, you didn't make a new high till 2011 or 12. So, this is why I trade the markets, and I'm always looking to put money to work. I've got a lot of money sitting in the bank. It makes me very uncomfortable, but I simply just don't know where I feel safe enough to put money to work. And I'd rather just, go for safety now than lose another 30% in the market, on money that I just don't feel like losing. The other stuff I'll just play around with. So, it's kind of a canard. It's these investment advisors, it's Wall Street, it's people selling you a bunch of BS. And so you're going to be underwater for a long time if you bought here, because these patterns now tell you that this is just started. So you have this kind of double top and this head and shoulders. So this shoulder's here, and then you got this leaky thing that is just going to get blown away. So this is Caterpillar, CAT. And so the patterns here tell you that this thing is just getting started. So we've dropped from 240 to 170, and that should look pretty frightening, but it's got more gas left in the tank. There's a lot of blue air now to start roaming into. And so on any bounce, and it doesn't look like you're really going to get a bounce here, you kind of broke through, you retested this thing, and now it looks like it's gone. So, I see chart after chart like this where it just looks ugly. And as bad as, we're down, what, 23% in the S&P, we're down 35% in the NASDAQ. I think you can double both of those figures. S&P will be down 50, NASDAQ will be down 70 by the time this is all over, or maybe even worse. Another buy and hold canard has been Disney. This was a major institutional stock. Everybody, pensions, everybody, this was a safe place to be. So this is round tripped from 2014. So you're at exactly the same place you were if you invested in 2014. So this is the problem with investing. Long-term investing. So you're, good boy, you're looking at your paper every day, you're reading your Wall Street Journal, you're having your coffee and your orange juice, and you're so happy to be watching your portfolio for 8 years. It takes 8 years to go up and like 6 months to come down. So this is devastating. This should really be, HA says cash is a position. It absolutely is. So this is the canard of investing. And this is what I've always felt. I've had a healthy degree of skepticism that we're just playing with fire with these derivatives, with our debt. And, this stuff is going to come back to haunt us. And this is what it looks like when it does. And so I hear people, recommending Disney all the time, every day on here, because this is the programming. It's a knee-jerk thing. It's like, okay, we've heard about Disney, in our minds, and every time our reference with Disney is that every buy is, every time it comes off, it goes to a new high. And so it's a knee-jerk thing to say, thing to feel, and it's human. Well, we've come up this much, surely it must be a buy here. But this is like catching a falling knife. Good luck. If you miss, it's going to carve your chest open. So yes, there is some support in here. Yes, could you get a dead cat bounce? No question. And if you did, you should short the world out of it. I would pray for this thing to bounce. But this is what we call dead money, where money goes to die. All of these people for years and years have not seen a return, and now they're 40% underwater. So, this is an example of why you need to understand price, because, people get very complacent. And again, I just want to kind of drive home a concept. So I told our members to short before earnings right there. And in one night, in 5 minutes, you dropped $100. So everybody who had been investing from here in 2020, every day you're watching your stock go up. Every day you're happy, you're spending, you're going on vacations, you're buying all those new shoes based on your portfolio going up. And so, I would say, the market takes a staircase up and an elevator down. And, so this should be a wake-up call. Whatever you decide to do now or in the future is that you cannot buy the garbage out there. These guys out there, they don't know what they're talking about. I hear it all the time. So, what I try and do with the pattern trader is, teach our members to think for themselves. I think I showed you this yesterday where, these analysts have put price targets of $1,200 on Tesla. And so when you see this, coming out of Morgan Stanley, it's very easy to say, okay, well, I need to get my portfolio positioned according to what this guy says. And he puts a price target of 1,200 and the stock's at 7. So, again, what, I shorted this right here. It looks like a lucky play, but to me, the patterns, this is a weekly chart, the patterns. So the market is ahead of the information. So right here, the market had formed this double top. So these guys already were getting out. The market was ahead of this. So this is how you can see the market is a forward-looking mechanism. By the time you get the news that, the stock's not doing so well, you've been cut to ribbons. And so this is, buyer beware. Raj says you shorted at 280. I did. I did a short stock sale. Sometimes I'll do options. So I did options in Facebook right here. Let me see if they still do an adjusted. This is Meta. Yeah, okay, so right here. So I did the same thing. I bought options right here, and I thought I was throwing money away. This was a little bit more complicated. I thought it was a little trickier than DocuSign. So Facebook was trading, I remember, right here at 320, and I bought the 300 put options for $5 that were expiring. I bought them on Tuesday. They were expiring on that Friday. I bought them for $5 at 310. The stock went through, to 320. I was like $20 out of the money plus 5. So this thing had to go down $25 just for me to break even. And then the earnings came out and the thing dropped like a stone, and my $5 went to 80. Yeah. So options are good in one way, in that you can limit your risk, because certainly if you go short, you have unlimited risk. And it's very treacherous. And I'm not trying to make any recommendations to, short earnings, because, you can really get carried away, taken out and lose everything. So options, all I had was $5 at risk. And I thought, I was throwing it away. It was like a garbage play. I put like 10 grand into it, or 15 grand, because it just looked at that time, like I was throwing away money. And, 10 grand went to, 90 or something. No, it went to 120. I made 12 times my money, or 14 times, something like that. Something stupid. So, sometimes I'll do these just for fun. I mean, it's a real charge to play these earnings. Sandeep says, what happened to the call option? I got out of those, Sandeep. I lost money. I forgot what I bought them for. I forgot what I sold them for. I can tell you right now. So I shouldn't just only put up the winners. I'll tell you right now to log back in. I took a shot at Schlumberger, but I could see it just wasn't happening today. So I got out. The options expired tomorrow, so I had no time. And let me see where I got out. Sorry, I'm just logging into my broker platform here. Anyhow, yeah, Schlumberger, and I still might, I'm kind of seeing how it's going to grab here. It looks really bad on the weekly. And sometimes I just take a poke against the previous low, not risking anything. I get in at 33 and risk at 32. And I thought we may find a bottom down here, but it doesn't look like that. So Schlumberger, I sold him. Sold him at 55 cents. Wait a minute. I bought him at 55 and I sold him at 25. So you can see. So, no big deal. I lost 50% of my money. Let's see, I got out at 25 and I bought him at 55. So I got out. I lost 50% of my money. And, next one, I made 300% on my SPXU and my triple Qs. So, you win some, you lose some. So MR says, Facebook dropped to 245. So that's, so I had the 300 calls. So they went to $65 and I paid $5 for them. So I made 12 times my money. So I'm just trying to think what I want to talk about today. There's, not a whole, the dollar yen still going higher. I think that's going to 150. Dollars making new highs every day, went to parity against the euro a few days ago. And I think we're going a lot lower on the euro. And I'm trying to think what I want to talk about. There's just, the pound Australian looks like it's just going to roll over and go lower. This thing looks like a rolling top. But, again, I hate sideways markets. What I try to do is identify markets that are going to move. So, we're in these markets that are just consolidating. The markets already have had vast moves. So what we've just been in for the last couple of weeks is a consolidation. So what I try and look for is a move. So you can see here was a double top and a head and shoulders, and it started to crack the neckline right here. So all you have to do is short the, from the neckline and take a piece of the middle out of a nice move. And that's what I look for. And then once markets go into these kind of things, I primarily leave them alone. But the more mature they get, the more they start telling me a story. And this feels like gold or silver before this recent roll. It feels a bit like a rounding top, and it should resolve itself that way. But, this is something that I'm not going to, this is not what I'm interested in doing. I'm interested in going there or there. So, everything, FedEx, everything looks like it's going to go lower. I'm very bearish these stock markets, but they're just in very tricky areas. So I think we probably should go back down again tomorrow. Today, sometimes the market will just move counterintuitively. So it's such a negative day, 9%, the Fed said 1%. So you have this short covering rally and people, don't understand and what have you. But this is the S&P. We're in one big bad downtrend. Maybe we can have another knock at the door around 3,900. But I think this is going to start. The difficulty is, and this is where, I said I identify the opportunity as well as the traps, is that the difficulty is sometimes when you're looking at a short-term chart, you're just seeing this thing fall. And then this is where there's a bit of a trapdoor where, there's some history here. Now you got to get through this price too. And this is where markets can really trap you, where they can come below here and you don't understand. And then they spring a trap. And so, I just understand how price moves, where it moves to. And, I think that we're still going to have one more shot down here, but you got to be very careful. So the markets are in just a kind of a consolidation. These are the summer doldrums. And, I just try and play these moves for very short term. I'm not holding my trades very long right now because the markets are just very whippy. So Alan says you only look at technical. Yeah. So this is so this could be a chart of anything. And I just analyze what this chart is. It's a down chart. I look for my key reversal. Here, this thing made a new high, close at the low. And so you can see when we came up here, it's just this is where I will short right there and put a risk right there above that high. So, I look for times where I've got little to no risk. And it sounds crazy, but sometimes I'll tell people like there's no risk in this trade. So I actually did this in the Qs and I took out close to 7 figures on this trade. On a crazy trade. So, This is the triple Qs. It's a market that's coming down. It's a market that, I've said consistently is just going to keep making lower lows. So every time, it pops up, I'm looking to short those rallies every time because it's just a bear market. So at this point, you had a rally into here. And then you started having this thing where you had this rounding top right here. And maybe there's some people in my boiler room on this right now or remember this. So what I do is I look at how a market behaves once it makes a high, so I say to myself, okay, it made a high here. What did it do the next day? Well, it didn't follow through, and it didn't follow through, and it didn't follow through, and then it didn't follow through, and then it didn't follow. So you can see that, markets get to very, similarly here, it makes a new low. Then what did it do? Well, it didn't make a new low. So so right here, it made a new high. And frankly, I thought, there was a chance that we could have come back to there. I thought the market would, keep going. But, what I think doesn't matter. The market, after it made a new high that day, didn't make a new high the next day, didn't make the new high the next day, that day. And so it was like pushing on a string. It was like this market, every day, just, try to go higher and then have no follow through. And right here, this small little key reversal where it made a new high and closed on the low, I loaded up. I mean, I put on so many put options in this thing. And you can see, there was 3 very robust days of follow through. And I bought the triple Qs for like $1.40 and I got out at 14. So I made 10x in 3 days on this trade. I did the same in the DIA. I bought these things in the Dow Jones, and in that same space, I did the Dow Jones and the triple Qs. And the combination, I made a few dollars. Right here in the Dow Jones, it was the same thing. And I bought these things for nothing. Right here, bought these puts, and then in 3 days, the market just collapsed. So what I look for are areas where the market starts telling you there's less and less risk. So if I get short here, literally in my mind, that's my risk. And if I lose, I lose. Like Schlumberger, I took a shot, I lost. If I lose on this, I lose. But when I make a fortune. So the whole premise of trading, it's not, everybody looks at how much they want to make or are going to make. To me, trading really comes down to, if you want to eliminate everything, what it very simply comes down to is what is your risk? So, sometimes the market gets going and the risk becomes more difficult to understand. So when you have these large ranges, now if you get short here, it's just, you don't know where your stop is. It's much more unbeknownst. So, right now I'm a little frustrated. I don't have, too many trading ideas. But what I do is I wait for trades to get into a certain ball where, there's like little or no risk. And the question is, if I can size up a trade where I think that I can get in for a very small risk for a bigger upside, that's when things are interesting to me. When the market tops out and then it kind of goes for 3 days, it's how do you apportion your risk here? If you get short here, I don't know where my risk is. Is it here? Is it here? Is it there? So, now I just wait for the market to give me more information to tell me where I can get short again. So tomorrow, if we see something like this, well, even that, that's still somewhat arbitrary. It can get down here, fake you out, and do all kinds of things. So I just look for pockets where I can understand risk and reward. That's just as simply as I could put it. DP wants to know about NVIDIA. So this NVIDIA was also a story stock. So everybody thinks in their mind that when everything comes rushing back, unfortunately, this isn't price adjusted. So, what I see on NVIDIA is, a very negative chart pattern, which tells me this just looks like everything. So everybody thinks we've done so much damage, stocks like NVIDIA that we used to seeing, rally in the past, that surely it should, rally now. And, maybe it gets back to this neckline, but I don't think so. It just looks very negative. And it just makes, what's happening is, you get all excited, you get excited and then it makes a new low. Then it comes back and then it makes a new low. And that's the definition of a bear market. It will get you excited again and then it'll go make a new low. And this is what, we have to expect. I know it sounds crazy. You look at Disney, you look at NVIDIA, they've come down so much, but this is going to be one of the worst bear markets of our lifetimes. I'm convinced of it. And so every rally, people think, well, okay, it's got to be safe to go back in the water again. It's not. NVIDIA, this is AMD, so this topped out right there. Then you had the head and shoulders right there. You had the neckline come through right here. So this is what's always interesting to me, right? So this has spent, 8 months making a top, going, through here, creating this whole top. To me, this is a whole, what I call a distribution. This is where people have been getting out. So again, if the market has topped and it's just started to crack, how can it just bottom? How can it top here after 8 months, go this distance and say, okay, it's a bottom? It doesn't work that way. This thing is a top and it's, going to just grind lower. Now we're in an area where it's tricky, where you could get very substantial support in here. You could have a run to 100. That is a 30% move. 40 or whatever it is, but it'll be a rally in a bear market. So the markets do move all over the place. And I will look for areas like this where maybe I can get a 20, 30% run out of here if there's a little bit of safety. So like AMD, you have this little key reversal here right into the support. You have this inside bar. So what I would do is simply put a buy stop above here. So what I do is I try and let the market confirm what I'm looking at. So you can really have your cake and eat it too. So into next week, if the market opens and then craps out, you're not filled. On the other hand, if it hits you, you could be into a nice trade. Let me just look at it on the daily here. Yeah, you see, this is there. You might have a little rally, but the problem is the rallies are getting smaller and smaller. So I will play these counter trend rallies for 20, 30% bounces, but the rallies are just getting smaller and smaller, so they're getting shorter and shorter. And, so you go in these, the market rallies for a day. And you can see it just runs out of steam so quickly. So, I feel very uncomfortable being long now. Sometimes I'll take a shot on some counter trend rally where you see a bit of a double bottom and you go for a little, stroll on the wall side. But you got to understand the big picture. And so this still looks very negative. This looks like a, head and shoulders in here. And so what I'll do is I'll look at this neckline and see, how the market plays. So if the market does look like it's, going to firm up here, maybe. I mean, these bottoms can, sometimes turn into something. But I don't know. So maybe. But if you do, just be aware that this is a short-term trade, and then the long-term trend is going to come in and punish you if you don't get out. So I will play these, get in these little areas here, play it for a day or two, and, take my $5 and go home. Tyron says, where do you find your stocks for trading? So I look at a million things. I look at earnings reports. I look at, you know, the active, you know, trades that go across the ticker every day, here is a good site that I'll put in the chat. This is a great site to screen stocks from all over the world. So this is, so this has, you know, all the most active, you know, today, up or down. But this is where you want to go, is this little tab here called the screener. You come here. My computer's freezing on me here. Shoot. My computer just froze. But anyhow, just go to this tab screener and you can open up. CZ, you are welcome. Can you analyze the last two losing Forex trades? I've been in the Euro trades. Not sure what's going on here. So I've actually made some money on. So here's the screener. You can go to exchange. You know, go to the NASDAQ, market cap, big, small, large, whatever you want. There's a filter here. So large cap, you want to go to a sector, consumer cyclical, technology, whatever, country. And then you get all, and the neat thing is you can just go along these ticker symbols and see the charts. So sometimes I'll look at a sector and my computer's really freezing here. So I'll just see the name in the left box here. And if I like the chart, I'll go and take a look at it and see if it's something I want to do. So it's a phenomenal resource. Vince says, what was that battery stock? QuantumScape? Is that what you're talking about? So I was trading QuantumScape last year. I was telling our members to short QuantumScape all the way from 140 down to 20. And now it's what, 10 bucks, 7? I don't know what it is. I haven't looked at it in a while. It's $9. So this is QuantumScape. It has some fancy battery. And I was shorting this all the way, from 100 on down. But, sometimes these things they go off the board. They're so low now. So QuantumScape had these huge patterns that I was trading off of them. Then they, went to 40 bucks and I was trading them down to 20. And then once something gets down to $20, the risk reward's not worth it there anymore. Thanks, Tyrone. CZ, the last losing FX trades, I don't know, losing, winning. I can go to my platform. I can see what a losers, and I don't remember. I don't really remember winners or losers. If the trade wins, I close it out, and then I'm going on to the next one. Trade loses, I close it out and, move on. So I've actually learned, and it's really helped. I literally don't know how much I make when I make, and I don't know how much I lose when I lose. I just look at the trade. And to me, either the trade is still working and there's a reason for staying in, and then I stayed in, I close it out. So I made a whole bunch of money on gold today, close it out, now move to the next one. I don't even know what I made or lost. So I'm trying to look, I'm in the New Zealand dollar US. That's what I've been in for a long time. Last losing trade was in, see, I got stopped out of dollar yen. So I've been trading a lot in the yen pairs, and I got stopped out, ironically, on a losing trade in dollar yen a few weeks ago. So I trade currencies very sparingly. I just, prefer stocks. So I lost whatever this was, 37 grand or whatever. right here. I lost, 200 pips on this trade in the dollar yen. And ironically, it's at new highs here. So, I've been trading a lot of the yen pairs. I used to trade a lot in pound New Zealand. That thing's kind of gone to sleep. So I don't really trade FX, to be quite honest, until, I really feel like there's something. I should have been short this euro. I've been telling everybody's going to parity for a long time. I've just been really actively trading stocks. So the euro is in this long-term descending wedge. We don't even have enough history here to show, I think this is going back to 80 cents. This has been topping for a decade. This is the dollar versus the yen. So if you look at these things through, a large prism, you can understand, now the euro's at parity and everybody is shocked. And I've been saying to our members, this has been going to parity since here. And I think now it's probably going to go to 80 cents. I mean, it took a long time to build this whole top. So now, it's just going to keep going. And I think we go to, 80 cents euro. I don't know. So Prashant says, what is your advice going to the market tomorrow? So I kind of wiped all my thing, even though I want to be short, I'm kind of tired. The market is just such a banging thing. Today you had a short covering rally. So, I took all my profits, on the opening, and I kind of went Apple. I bought some puts today just for fun. I don't know if they'll work out for next week. So where are my positions? So you can see I bought some 145 put options in Apple that expire next week, July 22nd. I bought them for 270. I bought 100 of them. I spent 27 grand. And so you have to be prepared to lose all of your money in options. So to me, I think Apple is going to announce earnings, well, actually the 26th. So, and I probably will be short Apple going into earnings. So I just think that this is a tricky area for Apple, where these are the major patterns. So you can see that, there's been a whole bunch of patterns, and I think this whole thing is a top. And you broke down, you retested, you broke down, and now you're kind of retest. And so I think this 150 area is going to be, now typically I don't like to just short into strength, like, there's no real evidence that Apple's about to turn right here, but I bought these for next week. So sometimes you got to just kind of, Wayne Gretzky, used to say, I don't skate to where the puck is, I skate to where it's going to go. And I think by virtue of the patterns here, I think Apple has a chance to maybe retest this 150, but I think ultimately is going to, crap out. So, there's a bit of a reversal. I just took a shot today. I shorted it. I've got a week to see, where this goes, and hopefully I don't lose all of my money. It's not really ready to go yet. It's not ready to turn yet. So it needs a few more days. But sometimes the best way to buy put options is into strength. So, if it rallies again a little bit into tomorrow, I'll actually add to my position, hoping that by next week, this thing's on the other side. So I did buy some put options. And I do think that Apple's going to announce earnings on the 26th. And depending on the price action, I probably will be short. But again, it would really depend on what price looks like at the time. So Apple has been trading on this neckline here. And you can see this is what prices do. They break out, they retest it, they break out, and they made a new low here. So I figured that it's going to keep making a new low. So I think it's very vulnerable up here, that, you're getting close to, this resistance level. So somewhere in here, I think it's likely going to, but, we'll see. Apple's a whole different thing. If price starts going that way, then, I'll get on the other side of it. So what I do is I set up my boundaries. I set up my charts. I say, okay, this is a double top. I say that this did break through and confirm. And now we're just treading water underneath this neckline. But on the other hand, if we start coming up here, you can get what's called a busted pattern, where all of a sudden the price action starts busting the implications of that. So what I try not to, I try not to be dogmatic and say, okay, this is it. I used to do that. When I was a kid, I would say, here's a double top. I put all my money in and then wonder why I lost all my money. So you can't be dogmatic. What I do is I just draw, what I think. I come up with certain, kind of scenarios, and I actually draw this out. I do this every day. I play that, and then I play the devil's advocate, and I say, can I see this? Can I see that? What happens if I see this? What happens if I see that? So I come in prepared. So if this thing starts doing this, by virtue of it not doing one thing, it's going to do the other. So, but I just use price. That's all I'm using. So I'm gonna, I could go on forever. I probably wasn't as focused today just because I closed out a bunch of trades. We're in the middle ground of a lot of things. The markets are, going sideways to lower, but they're always vulnerable to going lower. Most people are so programmed on the buy side that, when you see these rallies, and sometimes they can look huge and big, you can get suckered into them. So it's, again, when you get in these areas, you can see how sideways this is the Dow Jones. This is where it's just banging back and forth. And so, I'm just looking to line up trades, but I think that there's no bottom here. I mean, that there's no pattern that tells me that there's any support. So I see this key reversal. I see this. So to me, tomorrow, I think we will head lower again. There's nothing to tell, nothing to, I can't see this. And again, this is what I do. I draw these patterns and say, can I see this, or is it easier to see that? And it's easier to see this. So, depending on what happens tomorrow, I'll probably sell into some strength. I'll probably buy some puts in the Dow tomorrow. And that's probably what I'm going to do. Any higher opening in the Dow, I'm just going to buy some put options. Remember, tomorrow's Thursday. These puts, expire Friday. So sometimes what I do is I'll buy very close to in the money puts. So I use what's the DIA, which is the ETF for the Dow. You can see it's trading at about 307.75. So what I'll do is I'll buy like a 307 put. So I'll hope that it opens higher tomorrow. And then let's see. So the 307 put. Wow, it's very expensive. That's very expensive. So what this says is that this has got to go to 305, 30,500. Now the market does move 500 points a day. I thought this would be cheaper because this expires on Friday, right? So these are options that expire on Friday. So you've got literally 2 days for you to make, either you're going to be right or wrong. That's the thing. If you buy options for the following day, you got to be. So I'm hoping that the market opens higher and maybe I can buy these options for $1.50 or something. And I'll take a crack at that. So, or, somewhere under $2. These are much higher than I thought they would be. So I'll see what I want to do. But basically, this is a market that you just got to short the rallies. Prashant says I have, this is then I'm going to go after this. So let me just, Prashant says I'm looking at ILMN, which is something that I look at all the time. It's trading on the lows. I was just looking at it today. I mean, it looks really bad. So Prashant, what strike price and what date do you have? So it really, so, this is a stock that I've been betting on the short side, and you can see we made a new low today. I wouldn't really call this a reversal. This is, just leaking lower. This is just looks really bad. So this is one of the big, so you can see just on this history, this thing is just taken out all of these lows. So this is ILMN. I've been advising our members to short this stock. And again, massive double top, head and shoulder. This is what's called actually a complex head and shoulder, where you've got shoulders on both sides. And so, you broke through this neckline at 260, and now you went through the last support at 190, and now there's nothing. There's nothing under the stock but air. So you bought the August 180s. What did you pay? I mean, that's a great thing. I mean, you've got over a month, and you're at the money. So the August 180s, when in August? So August 5, August 16th. That's the 19th, the 12th, or the, okay, so I'm going to go the 19th. The 180s are trading at 12 to 13 bucks. It's not too bad. So what, if you were to come in now, your break even would be 167. So the thing for me with options is that I'm a cheap bastard. I try and look for very cheap options. I try and play like $1, $2, because in your mind, you got to prepare to be, risk everything. And so this costs you $1,320 because every option is 100 shares. But my calculation in any options trade I get into is that, to me, in order to put on an option trade, I have to see that I can make 3 times that bet to justify it. Because so many times I'm going to lose 50 or 100%. I lost 50% on my Schlumberger bet today, but I made 300% of my SPXUs. So, obviously your winners need to be bigger than your losers, certainly when you're playing options. So what I say to myself, in order for this to make me 3 times, this has to go to 40. So 40 minus 180, I have to see, ILMN go to 140 by August. And the way this stock is tracking, it could probably do it. I mean, this thing, takes massive haircuts all the time. So it's just a difficult bet, on the low, because any movement upward, you're going to lose so much of your money. That $13 is going to go to 7 in a heartbeat. So it's a little bit difficult. Look, I think it'll work. This stock looks horrible. This stock is going to get cut in half from here. So one day this stock will be trading at 60 bucks. So it could work. I try, and if I'm going to do a put play, I want to kind of do it into strength. So I actually bought some Tesla puts today into this up move. And I made a little money, and I chickened out, and I got out at the close. I made like $1 on it. I bought the 650s for next week. And when it was trading at 720, and then the thing dropped to 712, and I ducked out of that trade. But what I did was I bought Tesla into, an up move. Sandeep says, SLB earnings are due next week. Is that why you bought it? No, I bought it just on against certain price. So like I said, sometimes what I'll do is I'll just play around with certain areas where, I kind of say, does this have a chance to double bottom in here? You can see you had a pivot off here. So right here in the boiler room on Monday, I said, if this thing gets under $32, I'm going to buy it, just against this low right here, which was around, what was that low? Around 31.75. So you can see we backtracked here, and I just started buying these little options, thinking that maybe, once you get here, you could pivot off this. And even tomorrow, you could still kind of go, So I just want to see, this is a little area where I'm thinking if there is going to be support, then, I was taking a shot. But here's the thing, I was taking a shot where I got in like here, and, this is my risk. So if you bought the stock, you literally have like $1 worth of risk or less. And if I was right, I probably could have made $5 or $6. So to me, it's all about the risk. Now, this is a horrible looking chart. This says head and shoulders, and, this told you it was going to come off hard. And there's nothing really to tell you that there's, but I just thought maybe there would be a bounce or something. And so I was just using, certain areas. But again, in my mind, I was taking less than $1 of risk if I bought the stock. And so, there are certain times where the market becomes much more risky. Once the market gets going, even if you want to short Schlumberger, you see so what I like to do is get the horse when it's coming out of the barn, meaning I see a pattern. Here's the head and shoulders. It starts coming out of the pattern. So I short it right there. And now it starts getting going. Now, if you've missed it, it's much trickier to get short here than up there. Because, it's like once you get short there, you don't know what your risk is. So that's what it all comes down to, is that it ultimately comes down to knowing what your risk is. Because if you short here, it just becomes random. You short here, it just becomes. So what I try and look for are bars, like a reversal here where I can get short here. I know my risk is there, and I can go for a ride that way. So it's all about price action. So you know what? Let me throw you over to my book. This really explains it all. It's a pay what you want. This basically I share my entire trading strategy. The patterns I look at, the 5-step thing. And the great thing is it's a pay what you want. So $5, $10, $20, $100, you decide what the value is, and you can check it out. Now, this is a bit of a, yes, all proceeds do go to the American Childhood Cancer, but actually what I do is I double the proceeds. So whatever you decide you want to pay for this, $10, I then send $20 to the American Childhood Cancer Organization. And I've sent $34,000 to this organization in the last 12 months based on this. So if you want, check this out, and it'll give you more insight into my trading. So yeah, today was kind of all over. I think trying to give you an insight on how I use price as a weapon, to carve out money, independent of what the market's doing, independent if it's a bull market, a bear market, CPI, interest rates, it doesn't matter. Thanks, John. Thanks, everybody. I'll see you tomorrow. Dwight, thank you.
All right. Bye, Mark.